The only real measure, or February 12th, 2024, the only real measure move we got today was when we broke below this neckline, essentially this triple top. We broke below and got a measure move down, and that's where we started to get profit taking. This is always interesting when this happens. I've been mentioning on the daily chart that we're relatively overbought, and we had been relatively overbought. And when something like that happens, something like this can happen because, 47 is a strong bear bar, right? And we'd had a pretty good bull trend earlier in the day, and it probably still has some control over the market. But 47 is a surprisingly strong bar. And the bulls are starting to think, well, oh no, am I trapped below 46? Or bulls on the daily chart looking for a good place to take profits see, well, that's a really big bear bar, and this could be the start of something, some move down. And then the bears get follow through 48, and now we have two really good bear bars. And then, so generally, the more overbought you are, the sharper the sell off can be. And that's exactly what we got today, why we got such a climactic sell off and then an extremely climactic second leg. I'm not sure what the leg one, leg two, if it was exact or not. It was relatively close, but that's why that happens. Things like this can happen. Traders start to see 47, 48. They don't think it's going to be a strong bear trend because of how strong the earlier trend was. But the reality is, if you look at the context on the daily chart, we're so far overbought above the moving average that, it was unlikely that we were going to get another big bull trend day today. So context made sense. Bar one, a bull bar, but a tail on the top. So not really all that great. Yesterday was a bull trend day, but you're expecting a few hours of sideways to down trading. Something else, over the past couple of days, trading or trends always make wedges that fail. So I don't know if it was as relevant because wedges are constantly failing, but 1, 2, 3, breakout attempt above the wedge failed and we got the reversal down. So possibly the base of the wedge is a possible target, but yeah, we ended up getting 3 pushes up. Bad follow through on 2. It's essentially a double top with this bar yesterday, but it's really not all that good. And doji follow through bar on 3, which is relatively expected considering, again, bad sell signal. Bad follow through on 4 for the bears, probably buyers below 3, probably sellers above. So high 1 for the bulls. They're hoping this is a bull trend, but it's probably just a couple legs up. This looks like a leg in a trading range to me. Good bull bar 5, but really not all that strong, and bad context and bad follow through on 6, tail on the top. 7, a bear bar, but a big tail on the bottom. Another bear bar 8, but a big tail on the bottom, and then a strong bar on 9. But what is this, right? If you think about it, 7 traded down and then traded back up. 8 traded down and then traded back up, and then 9 traded down. So it's 3 pushes down. It's a third leg. On a smaller time frame, if you look at a 2-minute chart. On a 2-minute chart, you can see 1 pullback, 2 pullback, 3. So it's a couple legs down. So, you need to be thinking here, you're selling essentially a third push down in what's probably a trading range if you're selling 9. And additionally, you're selling low, right? So this is the day's range so far. You're probably selling relatively low in the trading range, and the prior day was a bull trend. So I'm not really all that confident that this is going to work. And you get a reversal up on 10. I think 10 is an okay buy for a swing. I wouldn't do it for a scalp, but you can see bulls initially more interested in buying pullbacks. They bought the 50% pullback of bar 10 rather than buying directly above. 10 is also right on the moving average, but I thought a couple legs down, it was reasonable to buy for a swing up. I did actually buy, and then I scalped out up here, and I never got back in. I sold 46, 47, 48 today. I did pretty well today. I sold over here, and I exited in here, and then I sold again 57, and I just took profits on the close of 58 because it was such a climactic bar. But I did buy early in the day, and I got out up here thinking we were probably going to find sellers up here. And my mistake was not buying again above 15. I think 15, you could buy any of these bull bars really. But, something I thought was interesting. So I'll go back to 10. But 10, potential measured move up. At least I would say 40% chance you're going to get a measured move up with this wedge. But really small day so far. And overall, I was expecting a more bearish day, as I have been in the past. We kept getting bull trend days, but eventually it's really going to stop. And I thought today was one of those days where it was going to be harder for me. I'd have to be more convinced on the bull side. And you get follow through for the bulls on 11. But like I said, bulls buying 50% pullback. More follow through on 12, but a big tail on the top. So not that good. And same thing, follow through on 13, but a big tail on the top. So not really that great. We might have to get here and above the day's high. I think this is going to be a magnet. But overall, at this point in the day, I didn't think we were going much higher. An inside bar on a 14, generally when you get a doji, the buy the close, it's technically buy the close, probably 12, 13, but it's not all that great. Um, excuse me, sorry. It's technically by the close, but it's not all that great. And you get an inside bar on 14, which is essentially a high one. And, while it is, again, probably, theoretically reasonable to buy above the high one, when you get a doji and buy the close, it's probably pretty close to over, usually within a couple bars. But then we got a surprise bar on 15. 15 closed stronger than traders were expecting, and it closed basically right at this close. A lot of traders thought when we got here there was going to be a bunch of sellers, and so it wasn't really going to be all that good. But instead, we got a bull close on 15, and the traders who sold above the 13 high, you can see on 16, they were never let out at break even. And the traders who sold above 14 were also never let out. So now you have those traders thinking, well, I might be trapped. This might not be a trading range. This might be the start of a bull trend. So 15 was a surprisingly strong bar, an incredible swing buy. And you get good follow through for the bulls on 16. Now the bears are really worried that they're trapped. And that's why you get a bigger bar 17. Traders are covering shorts. 18, a bull bar, pretty much the end of the spike at this point. Maybe we got a measure move up. I don't know. Maybe it was this measure move. That might have been the target, something like that. But anyways, climactic bar on 17 and doji follow through on 18. Now, are you selling below this? No. And it's, 19 is just a pullback, and traders are going to buy the first reversal with how strong this is. So you might be trailing a stop below most of these bars, but I don't know if you have to trail stop below 18. But I'd say stop below 17 probably. That's the most recent, buy climax is bar 17. So it's probably reasonable to have a stop below there. You can see bulls pretty eagerly about the pullback during 19, and they're looking for at least a second leg up. Good bull bar on 20 closing near its high. This is really climactic and really overdone. But as we've seen on the daily chart over the past couple of days, this can happen. It can be climactic and overdone and continue to rally. Follow through for the bulls on 22, so 21, bad follow through for the bulls. Some bulls buying as 21 is forming, betting it's not going to close on its low. So essentially when the bar is down here, traders are buying aggressively, hoping that this is not going to close on its low and force bulls to exit below. If it does close on its low, those bulls will just get out who bought, and their loss will be minimal. But if it does something like this, they could get a good rally and make a good profit. Follow through for the bulls on 22, another good bull bar, so still going higher. And you can see 23, more follow through for the bulls. So again, you don't want to sell against any of this. It's really strong, but we are definitely very overdone. We also have another gap with the 16 high and the 19 low. You can see it didn't overlap. It just touched. More follow through for the bulls, 23, 24. So again, really climactic, but still okay to be long. You could argue it's parabolic wedge, 1, pullback 2, pullback 3 of some kind, but this is really overdone. And again, 25, huge bull bar. So it's the best looking bull bar, and we're so overdone at this point that we're probably going to see some profit taking. I mean, it's been getting increased. This is really low probability in my opinion. Even when you see 15, 16, 17, I thought that we were probably going to stop somewhere up here. But it just got increasingly parabolic, which happens sometimes. And that's why always in trading can be so profitable, right? Because traders, they know this probably isn't going to happen, but buying above 15, usually they're going to get disappointed and get out. But the one time that this happens every once in a while, it offsets all of those losses. Inside bar 26, inside bar 27. So we're probably going to test back up to the 25 close. You can see we did during 28, but 26, 27 is an II and probably a final flag. So really not all that good to be buying up here. This is where traders are going to be exiting. And you can see on 28, it got back up to the 25 close and traders sold out of their longs. And it's a failed breakout above the II. And so when we start to get the breakout below, traders are exiting, and that causes the bear close 28. We know that most traders will exit below 28, but I don't think that it's the best sell in the world. The bears haven't done anything today. So probably not too many sellers below since this is so steep. And bulls bought the close, and then you get a good bull bar 29. So some always in traders will still be in. I personally think a lot of them will exit below the II. So not a lot of fuel to the fire buying above 29. It is a high too, but you're buying high in what is probably a trading range, and the bar is pretty big. So I don't think you want to take this. I mean, realistically, we need a deeper pullback. That was one of my problems over here. It was okay to be long. We were probably clearly back to always in long about 40, but this wasn't enough of a correction. I thought we had to go sideways for longer before we got the second leg up because these bulls were so exhausted. I mean, think about it this way with how parabolic this is. Think of it like running up a hill. The hill is getting increasingly steep. And as it's getting increasingly steep, you start running faster and faster and faster. And when you get to the top of the hill, you only get a very small break here, and then you want to keep running up the hill. It's probably not going to happen. You need a deeper pullback and a lot of rest before you can get that second leg up. Yeah, I hope that analogy, it seems to make sense, but that's what it is. Really, is the more parabolic it is, the longer the pullback's probably going to be. Bad follow through on 30. Again, it's the top of a trading range. We probably need a deeper pullback. 31, you can see traded towards the close of 28. So anyone who bought or sold the close of 28, disappointed 29.30, getting out around break even, and bulls will take any chance to buy below, essentially a doji bar and what's probably a bull trend. 31 does not close on its high, so a bit disappointing, and reversal down 32. Some traders might be looking to exit. Micro double top 33, not really all that great, and probably buyers below. You can see 34, but the pullback could again get to the moving average, so I wouldn't be buying below any bars up here. And then a big dump 35, a reversal up 36, but it's a small bar. I think if you're buying, stop a measure move down makes a lot more sense. But you do get 2-to-1 to the new high. And the reason to stop, measure move down makes a lot more sense is because 34 and 35 are pretty strong bars. And we're probably going to get a second leg down for the bears. And you don't know what that second leg is going to look like. It is a couple legs down, so we're probably going to get, start to get some sort of leg or attempt at a second leg up, and you're buying low in an overall trading range. But I think that, traders for the most part need to have a slightly wider stop here. And you get bad follow through 36, 37, probably buyers below 37, but we could fall below 36 pretty easily here. And then a bear bar, inside bar 39, but I don't want to sell that. Basically one of the first closes below the moving average in a while. I don't want to sell that. I think, we're only 10, 12 bars removed from the bull spike, so I think it's still in control. Surprise down, outside up 40, and what it tried to do was trap the traders out who had a weak stop below 36 and force them to buy again higher. And so those traders might start chasing the market up, and we could get a big second leg up. But my problem with that is, again, the context of the daily chart I thought was really important today. We were really overbought on the daily chart, and we were trying to basically just get an overshoot of this channel, and it probably wasn't going to happen. Because it's low probability, right? So follow through for the bulls 41, but not really all that great. It's okay to be long here. I think we're clearly back to always long above 40, but this is a big bar and you're still within a trading range, so it might not be the best. More follow through for the bulls 42, but disappointment 43 as we touch the 33 low, and another doji bar 44. It's okay to be long, but again, it's not all that great. If you think about it, it's buy climax, pause 41, buy climax, pause 43, 44, and then buy climax. So really it's a wedge or consecutive buy climaxes to the top of this range, and it's really not as good. If we were going to get the breakout, you'd want to see consecutive stronger bars, and you really just aren't getting it. And then you get a big surprise down on 47, closing near its low. And any bulls who are long for any reason are looking at this and thinking, oh, well, that was a lot stronger than I thought it was going to be. And they know the context of the daily chart, and they know we're probably really overbought. So a lot of them are probably pretty eager to get out below 47. And then, some of them might be scaling in, hoping that this was all strong enough that we'll get back to the 46 low and it'll let them out around break even. But we end up getting more follow through 48, and now bulls will start to panic out. So definitely, good swing sell here. You can sell the follow through 48, more follow through 49, 3 straight bear closes. We're probably going to get a measure move down. More follow through for the bears 50, but a climactic bar, tails on both sides. We're probably going to get a correction of 2 legs sideways to up. And when you see 47, one of the things you have to think about when you're thinking it's a swing sell is where are the open gaps? Because we're probably going to start closing gaps. If this is not a bull trend day, then it's probably a trading range day. And if it's a trading range day, gaps will close. So this gap here, right? You got to be thinking this gap might close. You got to be thinking, this gap might close. You got to be looking at all of these things, this negative gap here. You got to be looking at all these things, selling below 47. Well, we're probably pretty clearly always in short below 47. And now that it's a trading range day, your suspicion is that it's a trading range day. I think that's what you're saying when you're selling 47, and we might get a swing down. And so you got to be looking at all these gaps and all these areas that could close. And you get follow through for the bears 48, good bear bar closing on basically on its low. Bears will sell, follow through 49, follow through 50, all good bear bars. It's the low of 48 and the high of 50 overlapped, which isn't as great for the bears, but this is still so strong that you're thinking gaps are going to close. So okay to take either, especially with 48. You can take that and look at this, say, well, we're probably going to close this gap, and you have a high probability of that, and you can just get out of a bull bar. 51, we have tails on the bottom, so starting to stall. This is a really big move, and it's going to get a second leg, but there could be a pullback. 53, or sorry, 52, bears buying back shorts, and then a bull bar 53, but up on 52, down on 52, up on 53 could be two legs up. I think 53 is the worst place to exit your shorts because you're just exiting them somewhere where bulls are going to be getting out, or weak bulls are going to be buying. And the bulls realistically above 53 need one more good bar, and they're probably not going to get it. So I think if you exit above 53, probably just sell again below 54, definitely below 57. But low 154, follow through 55. You can see a lot of the bulls who bought above 53 knew they probably weren't going to get a good bull bar, but they were hoping to get a big second leg up from this and maybe get back to here. And they were hoping that would happen, basically start to get a big rally 54, but it didn't happen. So they sold out of their longs during 55. 56, essentially outside up, but trading range bar. And then 57, a low 2, bear bar closing near its low. Okay for always in bears to get back in. And you can see that they did. Traders started selling, and we just got a massive vacuum test all the way down here. What were we testing? I don't really know. I don't see anything obvious over here, but we were clearly testing something. And when we got to the target, look at 58. My problem with 58, it's such a climactic bar. And what are the odds that we're going to get all the way down here before we get up here? They're, maybe not all that great. We're probably going to get a deep pullback. Do you think traders are going to look at this? Traders who are selling any bar, right? They could have sold 57. They could have sold here, 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 anywhere. You think they're going to look at 58 and think, oh, that's a great place for me to add to my shorts? No, with how strong this is, they're thinking, well, my premise was it was a trading range day, right? That was your premise taking this sell. And this looks like a massive vacuum test. What are the odds we get good follow through? They're very low. And if you do get good follow through, you can always just sell again. So I don't think it's all that great to be selling the close of 58. If anything, it's more of a buy the close bar. And that's why you get traders taking profits, causing 59. But 59 is not going to get much follow through. Tails on both sides. And, such a strong bar, probably going to get a second leg sideways to down. Bad follow through 60 and Doji 61. Probably buyers below, probably sellers not too far above. High 262, but we're forming some sort of trading range, and you're high in the trading range. It's a high 1, but you're high in the trading range. This isn't a bull trend. I'm not taking that. 63, any bulls who did take 62 are getting out below 63. 63, I think you're selling high enough in a tight trading range. 60 to 63 is a tight trading range, but I think you're selling high enough that it's okay. But you're probably selling for a test of this low, because if you hold back as always in, we've had 1, 2, maybe we'll get 3, but it's probably not going to be all that great. But I think we'll test this low. So a lot of traders, you can see, they got follow through 64, 65, and they started scalping out. I don't know, maybe they made 5 points. Yeah, they were able to make about 5 points, and they start scalping out 65. Traders who sold 63 see other traders scalping out during 65. They scalp out during 66, and we start to get a rally. And the problem is exactly this, right? If you're holding this as always in, it's probably a trading range, and you can easily test back up towards your entry price before you continue down. 69, bad follow through. 70, more follow through for bulls, but not that good. Bear bar 71, but I think the move down is pretty much done. It could be 2 legs up, but I don't think we're going that far. And you get disappointment 72, traders exiting during 73. And we went pretty much sideways and tested the new low towards the end of the day. But I wouldn't do anything. Once you see the market start to go sideways here, basically like bar 71, 72 especially, I would just be done. For stop orders today, I thought 10 was good. And, if you're always in, you can hold the tail all the way up here. But probably by the close, somewhere 13, definitely 15, 16, 17, 18. This is all by the close. Exit below the II. Or worst case, get out a little later, somewhere here. You can probably buy above 41. And if you bought for any reason, you're getting out below 47. You can sell 47, 48, 49, any of these. You can sell 57. All good swing trades, really. Today was a really, blockbuster, or not blockbuster, really just a clear, good example of a stop order day. On the daily chart, we got a reversal down. I think a lot of always in bulls will probably exit below this. You don't have to if you're a bull. You probably don't have to exit below this, but I think a lot of always in bulls will. So, low probability of a plunge tomorrow. It could happen. Maybe, 30, 35% of a plunge tomorrow. But I think more likely these traders will be disappointed, and we're going to start to go sideways here. Now, we're probably going to go sideways. It doesn't mean we have to go down, but I think, we're probably going to be sideways to down for the next couple of days. This is just a stock thing. I was bored at the end of the day, so I started looking at stocks. And I was looking at Boeing, and, I was looking at the 5-minute chart, but I just thought it was interesting, right? Because you get essentially a wedge, 1, 2, 3, and you have a bare channel, and you have a clear channel line overshoot on 58. So you get the channel line overshoot. You look at this. What do you think it is? A trading range or a bear trend? It's probably a trading range, right? A couple bull legs up, a couple bear legs down, and a climactic bar at the bottom of the trading range, 58, and an inside bar, 60. So reasonable high one to buy. You get bad follow through 61, but I don't think you exit below. That's bad. You're not going to sell below that. And you can see traders who maybe did exit below are buying again above 62. That we're probably getting back to the 57 low because it's a trading range day, and you're going to close gaps. So I just thought that was interesting. I didn't take any trades here, but I thought 60 was a credible buy, and you could buy again above 62. Maybe, I don't think you get up below 64. You just keep holding, and then you get this, and we close well above this low, and traders are surprised by that, and we end up getting a good rally and closing lots of gaps. But yeah, that was just my thoughts on that. Yeah, and that's today.